Hey everyone, it is Julie here with TipRanks, and today we're taking a look at a few strong buy dividend stocks for September. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. I know every single time I do one of these monthly dividend videos, I cannot believe that another month has gone by, but this one especially. We have September long weekend here with Labor Day coming up, and it kind of feels like the official end of summer. But ready or not, September is here, and that means it's time to take a look at some dividend stocks for the month ahead. Today we're taking a look at 5 strong buy dividend stocks that all have an ex-dividend date in the month of September. That is the date you have to own the stock before in order to be eligible for their next dividend payment. So that means you're not going to have to wait around for several months to start collecting that passive income. We found today's stocks using the TipRanks dividend calendar. Found under the calendar section of tools here, the dividend calendar sorts by day all the companies that have ex-dividends coming up. It'll show you details such as the dividend, when the payment date is, and their payout ratio. We narrowed down our search to strong buy stocks and went from there. So today we're going to take a look at those companies, those dividend details, and of course what Wall Street analysts are predicting for the stock's future. Just before we get into these companies, this is a reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our dividend stocks for September. The first stock on our list today is Tapestry. They trade under the ticker TPR, currently priced at $40.71. In the past year, they've gained nearly 27%, but have cooled off recently, losing 12% in the last 6 months. Tapestry is the name behind some well-known luxury lifestyle brands. They are a New York City-based multinational fashion company, and their big-name brands include Coach, Kate Spade, and Stuart Weitzman. They sell ready-to-wear, outerwear, bags, shoes, jewelry, and more. They just shared their fourth quarter and full year results on August 15th, where the company did have some record results and an earnings and revenue beat. For their fourth quarter, they reported earnings per share of 92 cents, beating expectations by 4 cents per share. Revenue came in at $1.59 billion, which did beat estimates by $20 million. The company saw record annual revenue for their Coach brand as well. And the company declared their next quarterly dividend with an ex-dividend date on September 6th. That next dividend is going to be 35 cents per share, and they expect to maintain that annual dividend rate of $1.40 for fiscal 2025. That ex-dividend date of September 6th will lead to a payment date of September 23rd. The current yield comes in at about 3.69%. With 9 current analyst ratings, Tapestry is rated a strong buy based on 8 buys and 1 hold. And the average price target of $50.50 would imply an upside potential of 24% from current prices. Looking at those ratings down below, on the low end, we do have our hold here with an upside of 8%, while our high-end price target is the most recent here at $54 for an upside of over 32%. Our second dividend stock is Public Service Enterprise. They trade under the ticker PEG, currently priced just above $80 per share. Their stock has climbed 36% over the past year, and in the last 6 months is up 28%. Public Service Enterprise is a diversified energy company. They engage in the generation, transmission, and distributions of electricity and gas to residential, commercial, and industrial customers in the northeastern and mid-Atlantic United States. Founded back in 1903, they're now one of the 10 largest electric companies in the U.S., and they've been paying a dividend annually since 1907. Their current quarterly dividend is 60 cents per share for a dividend yield of 2.89%. Their ex-dividend date is on September 9th for payment on September 30th. They shared their Q2 earnings report at the end of July, where the company came out with both an earnings and revenue beat and reaffirmed their full-year guidance. For their second quarter, they reported revenue of $2.2 billion, which exceeded estimates by about $200 million, and earnings per share of 63 cents beat estimates by about 1 cent per share. Their stock is rated a strong buy based on 11 current analyst ratings with 9 buys and 2 holds. And the average price target of $82 would imply an upside potential of just 2%. But if you look at our graph here, we do have an outlying low-end price target. That comes from the hold rating here at Scotiabank with a downside of nearly 23%. Our high-end price target is at $91 from JP Morgan with an upside of over 13%. Our third stock today is not the most stable dividend of the group, but definitely has the highest yield. That is International Seaways. They trade under the ticker INSW, currently priced at $52.48 per share. Their stock has climbed 37% in the past year, but has cooled off here recently, losing 16% in the last 3 months. International Seaways is a shipping company. They're one of the largest tanker companies worldwide, providing energy transportation services for crude oil and petroleum products in international flag markets. They own and operate a fleet of 82 vessels. Now, their dividend payment does definitely fluctuate, but is currently offering a double-digit yield. At $1.50 per share on a quarterly basis, their current dividend yield is over 11%. That next ex-dividend date is on September 11th for payment on September 25th. International Seaways did come out with some mixed results for their second quarter on August 7th. They did miss on earnings while revenue was in line with expectations. They reported Q2 earnings per share of $2.37, which did fall about 16 cents short from analyst expectations. Revenue came in at $257.4 million, which was in line. While there are only 3 analysts that currently have a rating on the stock, it does come in as a unanimous strong buy. And the average price target comes in at $72.33, implying an upside potential of nearly 38% from current prices. Looking at those ratings down below, they range from a low-end price target at 25% upside to a high-end price target with an upside of 56%. Moving back to a lower but very stable dividend, number 4 on the list is Portland GE. Portland General Electric trades under the ticker POR, currently priced just shy of $48 per share. The stock has climbed 14% in the past year, and in the last 3 months has gained 8.5%. Portland GE is a vertically integrated electric utility company. And for more than 130 years, they've been finding new and innovative ways to provide clean, reliable energy to their fellow Oregonians. They are the largest utility provider in Oregon, generating, transmitting, and distributing electricity to approximately 934,000 customers in 51 cities across the state. Portland GE has been consistently increasing their dividend for 19 years, and their current quarterly dividend comes in at 50 cents per share for a dividend yield of just over 4%. Their next ex-dividend date is near the end of the month on September 24th for payment of October 15th. And back on July 26th, they did report both an earnings and revenue beat for their second quarter. Q2 earnings per share came in at 69 cents, beating expectations by 4 cents per share, and revenue of $758 million beat by over $41 million. The company did reaffirm their 2024 adjusted earnings guidance. There are 4 analysts with current ratings on the stock, coming in as a strong buy with 3 buys and 1 hold. And the average price target comes in at $51 per share for an upside potential of 6.85%. Looking at those ratings down below, we actually only have 2 that have assigned price targets. One back in July here with an upside of 0.46%, while a more recent one here with an upside of 13%. If you've made it all the way to our 5th dividend stock today, then this is a reminder to make sure you hit that thumbs up button. Last but not least on the list is Mondelez International. They trade under the ticker MDLZ, currently priced at $71.25. They've gained about 2.5% overall in the last year, climbing 4.5% in the last 3 months. Mondelez International is one of the largest snack companies in the world. They manufacture and market snack food products, and some of their global brands include big names like Oreo, Chips Ahoy, Ritz Crackers, Triscuits, Toblerone, Philadelphia cream cheese, Dairy Milk, and the list goes on and on. They've been paying out a dividend since 2001 and consistently growing it for over a decade. Their current quarterly dividend is 47 cents per share for a dividend yield of 2.38%. Their ex-dividend date is September 30th for payment on October 14th. They shared their second quarter earnings report on July 30th and did have some mixed results, with earnings beating but revenue missing. Their Q2 earnings per share of 86 cents beat expectations by 7 cents per share, while revenue did decline slightly year over year, coming in at $8.34 billion, missing by about $110 million. But analysts are still feeling bullish on the stock. There are 18 current ratings, and it comes in as a strong buy with 17 buys and just 1 hold. And analysts' average price target of $77.43 would imply an upside potential of about 8.8%. Looking at those recent ratings down below, on the low end, we do have a price target of $73 for an upside of about 2.5%, while our high-end price target comes in at $88 for an upside of 23.5%. So there we have 5 strong buy stocks, all with ex-dividend dates in the month of September. Let me know your thoughts on these companies and what other dividend stocks you love lately. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great long weekend, and I'll see you back here next time.